Good morning everyone and welcome back to this new edition of the weekly analysis. As is customary, let's begin with a comprehensive recap of the significant events that transpired last week. Indeed, the previous week concluded with a rather turbulent and volatile close, with the financial markets reacting quite sharply and dramatically to a series of significant macroeconomic events that took place across the globe. There were several concerning negative data points and a noticeable bit of underlying tension, which collectively led to a substantial and pronounced market pullback. Subsequently, the market then somewhat stabilized and found a degree of equilibrium on Friday, although it still ultimately closed at its absolute lowest points for the week. Then, over the course of the past weekend, a few significant and notable things indeed happened. President Trump, with a decisive executive order, commanded the immediate dismissal of the director of the BLS, which is the highly important Bureau of Labor Statistics. He specifically removed Erica McIntyre, I believe that is her correct name, due to some alleged and significant mistakes that were made by the BLS in the recent release of crucial economic data. The Trump administration had already proposed significant cuts to this institute. In particular, the federal budget for the fiscal year 2026 is expected to be cut by about 8%, so it's a situation that's still developing. In addition, the current administration has also systematically dissolved several important independent advisory committees, including the highly influential Federal Economic Statistics Advisory Committee, which previously provided crucial guidance on key economic indicators such as inflation rates and the gross domestic product, GDP. So this particular situation is currently giving the broader market a much needed bit of breathing room, let's say, which actually started off this morning, well, more precisely last night, with the official opening of the regular trading hours, with a really good and substantial rebound across all equities. And at this very moment, even though the overall recovery is certainly not extreme or completely finished, because the significant drop was still quite substantial both on Thursday and Friday, the market truly took a very considerable hit. The recovery is indeed happening, but it's not, let's say, exceptionally strong or robust. This week, there are also a handful of significant data releases. Let me succinctly summarize the most important ones for you. Today, Monday, the Canadian and UK financial markets are officially closed. Then, later today, we anticipate the release of crucial US durable goods data, and there's also a highly anticipated 10-year bond auction scheduled in the UK, specifically for British government bonds, which are often referred to as gilts. Then on Tuesday, so tomorrow, we have the services PMI for the European Union and for the UK, and then we have the services PMI for the United States and the ISM. There's also a 3-year bond auction, again for US Treasury securities. On Wednesday, we have the release of the June retail sales figures for the entire European Union, and then two prominent members of the Federal Reserve, Collins and Cook, are widely expected to deliver important speeches. We also anticipate the release of the crucial Chinese trade balance data. Then moving on to Thursday, there will be the weekly jobless claims report. Federal Reserve official Bostic is scheduled to speak. There's the significant survey on consumer expectations, and a 30-year bond auction will take place. The week then concludes with the highly anticipated release of the July Consumer Price Index, CPI, from China. So these are the most important macroeconomic data points of the week. So this week could perhaps be a bit of a recovery in line with how the week started. We'll see if this initial push at the beginning of the week finds support and strength to continue, or if it will just be the classic rebound after the decline of the past few days. If we take a look from a technical perspective in more detail, this is the Nasdaq. The first hurdle to overcome is at 23,160, 23,180. In my opinion, breaking through this level could push prices up to the 23,400, 23,500 area to test this whole zone, which will now act as support. So basically this entire area between 23,300 and 23,500, roughly speaking. Basically, I'm referring to this whole area here that I'm showing you with the mouse. So this entire area will definitely act as resistance, especially if we first manage to get past this barrier, which I consider important. 23,070 is essentially the first obstacle we'll encounter on this upward move. On the downside, of course, we need to keep an eye on the lows that were recorded last week. so the 22,790 and 22,750 areas, because breaking through these levels could trigger a new bearish impulse. Essentially, it could create a second wave after this first wave, which we can define as a retracement if it doesn't break here and instead looks for a higher test area. Obviously, we could also see a significant drop during the week, potentially reaching the weekly lows or even the monthly lows at 21,900 or 21,850. These are definitely areas where the market could find an initial support. We can pretty much say the same thing for ES as well. Even though it has recovered a bit better than the Nasdaq, in my opinion, the main obstacle to overcome right now remains this area here, the first one. So 6,330, 6,325, 6,330. If it manages to break through this level, we'll probably run into resistance here around the 3,380, 3,400 area, and here it will be tough as well to be able to break through this whole resistance zone. On the downside, of course, here too we need to monitor these two lows that were recorded on Friday around the 6,140 area, which then represents the lower boundary of that trading range I showed you between 3,140 and 6,240. So we've come back into this 100-point range and we're working within it. We've touched the lower end. We might possibly see, in fact, a push up to the 6,040 area. If that level doesn't hold, the price will probably be pushed back down again to the 6,240 area for another test of that zone, and then we'll see how things develop from there. Let's also move on to the other American futures that we follow, starting with the Dow Jones. Here it comes. The Dow Jones has recovered a bit. You can see it has already broken through, or rather it was working right around the area, well, the resistance area, which is the 44,000 to 44,100 zone that we've pointed out several times before for other reasons as well in previous editions of the weekly analysis. So on the upside, let's keep an eye on this area between 44,150 and 44,300. This is the key level we need to break through in order to aim for obviously a retest of this area here around 44,900 to 45,000, which is also a round number and will certainly act as a major resistance level to overcome. On the downside, here too we need to monitor these lows. Even though they've been made in a descending fashion, these two lows are definitely the ones to watch, to keep an eye on in the 43,400 to 43,500 area, because breaking below these could certainly lead the price to retest lower levels around 42,200, 42,000. Let's also take a closer look at the Russell, which right now has reacted in a manner exactly like the Dow Jones, coming up to test the very first significant resistance area at 2,190, 2,200. If it manages to successfully break through this particular level, we can easily expect a retest of this important area here at 2,030, specifically between 2,220 to 2,230. Certainly in this area the market will have difficulty breaking through. Obviously on the downside here as well, we are going to monitor this low here, which is 2,150, 2,145, because a break could push prices down into the 2,100, 2,080 area, which then represents the VIX area and the monthly low for the Russell. Let's move on to the European futures, the only European future we follow, which is the DAX. It too had a significant pullback due to a whole series of issues related to tariffs and agreements. A bit, let me say it, a bit crazy, made by the underlayer, but we have to acknowledge it. In short, the market here had experienced quite a significant drop. But the moment, well, this morning it started with a bit of a recovery. We're already in today's VX area. The recovery of the 24,000 area, in short, should give an upward impulse that could bring prices back to retest this resistance area around 24.3, 24.3, 24.3, 24.4, with some spikes up to 24.5, which we can identify as this high here that needs to be surpassed. On the downside, of course, we're monitoring this area here at 24.50 because a break below this could bring the price much lower, even breaking through the 23,000 area. Let's move on to commodities. Here they come, starting with oil. Just a moment, here it is as I pull it up. It started off this morning having recovered a little bit, but as we can see right now, I hadn't noticed before, it's had quite a drop of about $1. So from the highs of 67.60, it's fallen to 65.30. This new downtrend is continuing a bit, probably to test. Let's bring up for a moment a triangle I drew last week, which I showed in the weekly analysis. You can see there was a breakout, then a retest, and then it moved upward. This is a 30-minute chart, and we can also try to identify maybe a head and shoulders pattern here with the neckline around 68.50. Once that was broken, the market took a bearish direction. We could also expect a test of this triangle area, which might be tested. Basically, I drew it quickly last week and then left it there, but more or less this is the area it could go to test. 65.80, 65.50, which could definitely slow down the drop a bit and maybe prompt some upward recovery. A break of this level could lead to, well, to broader pullbacks down to around 63, 60, 62.80 more or less. On the upside, of course, we are monitoring this triangle situation because it might find support here and start rising again. So the first obstacle we might encounter would be right at 68.50, which at this moment could represent the neckline of this sort of head and shoulders pattern that I see here on the 30-minute chart. As you can see, it could definitely come back to test it. Let's take a comprehensive look at the precious metal gold, which on Friday, following the release of significant economic data, made a remarkably strong and decisive upward move. This was in stark contrast to the downward trends observed on the major stock indices, so we witnessed this substantial and impressive upward movement in gold prices. It brought prices to basically back to actively testing the significant 3,400 area with well, now we have a somewhat sideways trading situation that is effectively compressing prices within a relatively tight range of about 10 to 15 points from the opening of the trading day. Trading hour. So a continuation to the upside would mean breaking through this area of highs here, which were recorded just this morning. So the 3,415, 3,420 area could provide the push up to 3,450 to 3,460. Obviously, a move back below this area here, so 3,390, 3,375 could definitely bring prices back to retest this area here around 3,350, 3,330. In short, definitely. Then let's always remember 3,280, which is the major support we have a bit lower down. It's really the main one to keep an eye on. And well, we still have to take a look at Bitcoin just for a quick glance. Basically, it moved sideways a bit throughout last week after the swings, that is, after the surges that happened mainly due to Trump's statements, which, well, added a bit of fuel, a bit of momentum, especially to Ethereum and to everything related to decentralized finance proposed by Ethereum. And well, this led to a nice bullish surge, only to then see a bit of sideways movement. Now we've broken out of this range. The price has settled around the 110 area. This happened on Saturday. As you know, these cryptocurrencies stay open even on weekends. It's now attempting a recovery, so at this moment 115.4 is and remains the area to break through for a possible retest of the 120,000 area. On the downside instead, we need to keep an eye on 112 because a break below 112 could bring prices back down to the 100,000 area. Let's also take a quick look at Ethereum just because we mentioned it. Here it is, a similar situation. It had a nice surge, stayed a bit above, and then continued with a significant pullback that brought prices down to, well, to break, let's say, to violate the area where the upward movement started. There was a break, but we can probably consider it a false breakout from the range because now it's recovered and we're testing it again. So if it continues upward, we can view this area as a false breakout. Therefore, let's keep the 3.4 to 3.5 area as the main support zone. Perfect. With this, we've reached the end of this weekly analysis. As always, I invite you to leave a like on the video and follow me on social media. We'll catch up later in the chat. Thank you all for your attention.